Okay, guys, so last night your homework was to draw support and resistance lines. I looked at your homework. Some of you need some help with trading view, so I have got a really good video that breaks down how to work trading view. I am going to, okay, let's I'm going to drop it in the chat for you guys. What? Oh, my caps lock's on. Good Lord. Oh, if y'all don't know, I'm moving into my new house, and I'm on my laptop. I'm not on my Mac. And internet is slow here. Sorry, guys. Oh. Oh, the devil's a lie today. Come on. There we are. Okay, guys. So tonight we are doing market structure. Maybe it's trend identification. Let me check my syllabus. Trend identification, and then we're doing market structure. My bad, guys. Yes, my finger is still band-aided up. It's crazy. It hurts so bad.
Someone asked you what a trend line is. A trend line.
Sorry, guys, I'm not used to doing the webinars on this laptop. Thank you for letting me know.
All right, everyone, welcome to our introductory video on trend identification. In this video, we're going to be taking a look first at trend lines, what they represent, a little bit of conceptual basis for them, how they are identified, how they are drawn, and then we're going to go look in the markets, look at practical examples, and apply that information. So, like always, let's hop out of the charts. All right, so our goal here is to figure out what exactly a trend line is. Now here we've got a table in front of us, and on the left we have traditional support and resistance, and on the right we have trend line. So our goal by the end of this is to answer the question, what's the trend line? And we're going to start over here on the left-hand side by drawing a traditional horizontal support and resistance level. So this level right here is a horizontal support and resistance level. Now, how does price react at a support and resistance level? Well, let's say that we are under the level, price is under the level, then that level will hold as resistance. So here the level is holding as resistance, pushing price down, and then when price does breach through the level, that level will then turn to support, price will come back to retest, it will hold a support, and price will continue on. So that is typically how traditional horizontal support and resistance works. Now how a trend line works, so let's draw a trend line now. So a trend line may look like this. And the way price will work on a trend line will go up, it will come down and bounce off the trend line, go up, come down and bounce on the trend line, go up, come down and bounce on the trend line. And then finally, the trend line will break. And when the trend line breaks, price will come back up to the trend line, retest it, and then continue on in the other direction. So if you think about what just happened, they're essentially the exact same thing. Horizontal support and resistance and trend lines function in the exact same way. It's just that trend lines are diagonal. They are angled. They are not perfectly horizontal. As you can see, they act as support when price is above them, and then they act as resistance once they are broken. Same way that our horizontal level acts with price, act as resistance and then become support. And of course, this works in both ways. So now when price is going down, you have a descending trend line. When price reaches this retest, it will hold a support and price will continue on, just as it did here with the horizontal level. So the way that I want you all to understand what trend lines actually are, the answer, if anyone asks you what a trend line is simply diagonal support and resistance. That's it. That's all a trend line is. So this is our answer to the question, what is a trend line?
Okay, guys, I'm going to pause for a second for you to write that down in your notes. A trend line is diagonal support and resistance. A trend line is diagonal support and resistance.
So now that we know the core basics as to what a trend line is and kind of how it works, we need to understand conceptually why they form so that we have confidence when we use them and put real money on the line. All right, so now our question is, why do trend lines form? Why should we rely on them for our analysis? So what we're going to do is we're going to just draw an uptrend here for this example. So here is our uptrend. All right, and then we're going to draw our trend line for this uptrend. All right, so let's connect these here. Okay. So to understand why trend lines form, we need to understand a little bit about market psychology, supply and demand, and market participants. Right now, we can conclude that the market is bullish. So when we conclude that the market is bullish, what that means is that key market participants, people with enough equity to move the market and actually impact price, are long on this pair. Now, if you open up the market and you're looking to get in on this market and capitalize on the bullish move, here's my question to you. Do you buy right here when price is high? Price is high, overpriced, expensive, etc. So up here, this is not the place to buy. You don't want to buy when price is overinflated, overextended, and expensive. Nobody goes to Walmart and buys the TV once it's been marked up. Everyone goes to Walmart and buys the TV once it's on sale. Now, there are a lot of deep economic concepts and principles that drive this human behavior, and you see widespread applications of this across all economic sectors. You even see it in holidays, and you see it played out with events like Black Friday. Now, I don't know if you've ever been to a Black Friday event or a Black Friday sale, but people are willing to kill other people. They're willing to slap babies for 20% off a microwave. Absolutely irrational behavior, all just for a quote-unquote fair or discounted price. Nobody wants to pay full price. Now, this is not necessarily some kind of wise, deep understanding. Most people can rationalize that the general public would want to buy something at a discount rather than paying full price. But when we start talking about institutional investors, the people that actually have the equity to control market price and move and impact the market, These people will only buy at a discount. It's not a want for them, it's a requirement, because these people have so much money on the line, that buying at a discount means saving billions of dollars on just a single transaction. So when we talk about the financial markets and we're looking at cases of supply and demand, it's important to understand that these big players, these people that are actually controlling and moving the market, they have no choice but to get a low price. There's simply too much money on the line. 20% of $100 is only $20. 20% of $100 billion is $20 billion that it would cost them to not wait for the discounted price. So when we look at trend lines, what we're really seeing is institutional investors coming in at a common discount rate. So if you open up a chart and you see that price is up here, the institutional investors are looking at this and thinking, okay, I need price to come back down for a discount so that I can buy. And this ascending trend line support here typically forms because the discount rate that many of these institutional investors are looking for is usually around the same rate. And when you have similar pullback ratios, trend line support here typically forms because the discount rate that many of these institutional investors are looking for is usually around the same rate. And when you have similar pullback ratios,
Every time I go through the syllabus with you guys, this video does this to me. I don't know why it does it either, but it's just this video, it's just this lesson, and it is every single time. Oh.
Typically forms because the discount rate that many of these institutional investors are looking for is usually around the same rate. And when you have similar pullback ratios, typically forms because the discount rate that many of these institutional investors are looking for is usually around the same rate. And when you have similar pullback ratios,
And it always does it right here in this, like, I don't know why it does this to me every single time we do this lesson.
Yeah, basically the buffering on this video definitely is a pain.
I know, and it's just this one video that does it. Every time I go through the syllabus this night, we always struggle with this one video. I don't.
I got this
I'm trying to.
and I'll record it and save it, and then you can just run the video from your computer in the future for this particular one.
Yes, that would be great.
I don't have access to the
as well as help you identify the overall market trend on to manage trades with, as well as help you identify the overall market trend. Because we understand that big players are the ones that actually control the market trend, here's another way I want you to understand what a trend line really represents. So let's say that over here, we start off and price is at 81.0. And then let's say that some big institution has a total of $50 billion that they need to get rid of. So let's go ahead and write down $50 billion that they need to get rid of. So let's make this a little smaller here. All right. So they need to get rid of $50 billion. So what they're going to do is, let's say they get rid of 10 billion of it right here. So roughly 10 billion they get rid of right here. Now when this happens, so when they place this order right here, it's going to push price up. And now when price is all the way up here, they're not going to place another order. What they need to see is they need to see price pull back so that they can place another order for, let's say, another $10 billion. So they want to get rid of another $10 billion, but they need a discount to do so. So what they'll do, and they know that they've got to do this. So let's clone, and then, so 1, 2, 3, and then let's move this up here as well. And then here's our final order. So they know that they need to do this a total of 4 more times to fill the entire $50 billion worth of order. So what they'll do is they say, okay,
Oh my goodness. Ugh. You know, when I first started tonight, I said the devil is a lie, and the devil is a lie.
To fill the entire $50 billion worth of order. So what they'll do is they say, okay, I'm
Oh my goodness. MJ, do you think you can pull it up on your computer?
I'm actually in the Range Rover driving
Oh,
right
okay.
now. Otherwise, I'd be happy to go ahead and do it for you. I apologize.
That's no problem. That's no problem. I don't, it's this one video. It does it every single time we go through the syllabus. Mm.
Yeah, I can break it down for him real quick, though. Just go ahead and put it on
Okay.
pause. I can give him my rundown on this.
Okay.
All right, guys. This is Michael Jason. I go by MJ. If you can hear me loud and clear, go ahead and type a 1 in the chat real quick, just so I know you guys are following along. I am mobile at the moment. All right, excellent, excellent. All right, let me go ahead and do this real quick. Not sure how. All right, so basically what they're doing is they're looking at the banks, right, the big money movers and shakers in this environment called Forex that we trade. What they're doing is they're trying to sell off large lots of their stocks, their options, their currency exchanges, what have not. And they can't just drop it all immediately, right? They want to get in and drop a little here and drop a little there, and then, you know, all of a sudden you see the market take a complete 180, and that's when they're trying to sell off the majority of their options or stocks, their investments, whatever it may be. So you're going to slowly see the market's momentum start to shift and change as it increases towards a certain limit, normally around the monthly or the bank levels that we talk about in trading, right? And that's when you see when the big movements or adjustments of direction start to happen. So what he's showing you on the screen there, I'm not sure if you can see me, I'm kind of holding my phone and going into COVID-19 land, is what they're trying to do is they're trying to sell off but not really do an insider kind of trade where they just dropped it all at once. So as you start to see momentum start to slow down, the candles, the volume, the relative strength index, whatever indicators that you may be using, when you start to see it start to slow down and you get forward progress stops, you're going to see the reverse, whether it's going up or down. And that's when you want to have your charts charted and look for that point. And all you have to do is look left, guys. Just look left in the past, and you'll see at certain specific levels when the big money movers like to, you know, exchange their money, and they're doing exactly the same thing we're doing. They just do it at a lot larger size. That's what you're gonna kind of see in this video where he's he's following the progress of the pair that he has on the screen. And as price starts to reach that top ceiling or the bottom floor, you're going to start to see a massive reversal. And it's what's going to happen is you're going to always see a break and a retest. And you're going to hear that time and time again as you go through your training, is break and retest. And that's what you're going to see when it stops. It's going to come back down. It's going to come back for a retest, and it's just going to fall out the sky because there's no more strength on that move. So that's basically what's going on. Let's see. I hope it kind of made a little bit of sense to y'all. I see a lot of chats going on in here. Let me just take a quick look. Devil is busy.
Yeah. Devil doesn't like this video for some reason. Okay. It does it every time. I thought this time would be different.
So I want you
to run in the store real quick. But I got
actually see with this bullish market, imagine that over here on the right hand side, when we looked at this bullish market, what you're actually seeing is 60% discount rate buy order. Okay, right here, 60% discount rate buy order. Right here, 60% discount rate buy order. And this is what's driving the market in its bullish trend. It's supply and demand. They're coming in, filling their orders at specific discount rates that they've agreed upon, and thus you end up with a solid, reliable trend line that's showing you where they're coming in. And so what happens from a conceptual standpoint is when this trend line breaches, we now know that those orders are done being filled. They've now filled their order. So what will happen is price will come back up. It'll test it as resistance. The market has identified this trend line as a support. So it'll come back up and test it as resistance. And then sellers will enter in, and then we'll go the opposite direction. So this is a conceptual understanding for why trend lines form. This is not something that you can see by just looking at a price chart. This is not something that you can just find readily online, but this is the truth, and this is why they work. This is why we use them, and this is why you can trust and rely and have confidence in your technical analysis and understand what it means from a deeper standpoint. And overall, that's going to help you. Having this understanding will help you in your confidence in your trading and will help you make money. So now that we understand what trend lines are, why they form, we need to understand the proper way to draw them. All right, now for the bullish market, we are heading up, of course. So we will do it like this. And then in the bearish market, we are heading down. All right. Now, for trend lines in a bullish market, you need your trend lines to be at the bottom of price. You're going to be connecting the valleys in the market, the lows of the market, the points where market finds support and rises, bounces from the bottom. Those are the connections you want to look for in a rising market. Your trend line will be beneath the price, and we'll explain why in just a moment. Now, in a bearish market, your trend line goes above price. All right. So here in a bearish market, you're looking for the peaks in the market, the tops, the highs, the points where market comes up and rejects. Now, understanding how trend lines form from a conceptual standpoint will help you understand why the trend lines are drawn in this way. But one way that really helped me remember this is to understand why we're drawing the trend line in the first place. So let me ask you a hypothetical question. If we had a trend line, so let's say we're in a bullish market and we had a trend line on top of price. Now, if price were to break through this trend line to the top, retest and continue going, we would still be in a bullish market, right? So this trend line doesn't really tell us much in terms of what the trend is. And by definition, trend lines are used for trend identification. So that doesn't really make much sense to draw it on the top. However, in a bullish market with the trend line on the bottom, if price were to break this trend line to the bottom and retest, where's price going to go? It's going to go down based on our understanding of support and resistance. It'll break the support, which is beneath price, and then it will retest. And when it retests, the trend line will now be resistance, price will fall. So therefore, by definition, in a bullish market, having our trend line beneath price as a support will function to let us know when that trend line breaches, we actually have a change in trend. So it's actually aiding us with the trend identification. So that's one technique that I use and recommend understanding to remember whether you need to draw your trend line below or above. So just remember that. Think about that when you go into the markets and you're trying to figure out what you need to be connecting. Ask yourself if drawing the trend line there will actually help you in trend identification. Similarly, over here in this bearish market, we know that when this resistance breaks above our head, we know that that means that the trend has changed. We are now going to be going bullish based on our understanding of support and resistance. However, if that trend line was beneath us, when price breaks the trend line to the downside, it would retest and simply continue going down. So it doesn't really tell us anything about a trend change. So it doesn't really do us any good in terms of trend identification and alerting us of trend change. So that's conceptually understanding how to properly draw your trend lines. And now we've got enough information to go into the markets and apply it. All right, so here we are on the US dollar Russian ruble on the daily time frame, and we're going to go ahead and drop a vertical line over here and just work our way from the left to the right, identifying the trend lines in the market, seeing what they actually look like in the market, and getting into some of the details about how to specifically connect different peaks and valleys to get the most accurate trend line possible for your trading, which will become very important in later lessons and in your overall independent trading. So let's zoom in over here on the left-hand side. And we're going to just start with this area right here. So the first thing that we're going to note is that we've got a peak in the market right here. Okay, so let's go ahead and call this out. This is a peak in the market. All right, now we fall down here and we come back up, and then here we fall again and we see, okay, we've got another peak in the market right here. So here's our next peak. And similar to support and resistance, how you need at least two identifiers to actually mark your horizontal level. When it comes to trend lines, you also need at least two identifiers to mark your trend line. So if you notice over here, we are in a bearish market. How do you know we're in a bearish market? Well, real simple. If you look on the left, we start up here. If you look over on the right, we end up down here. You go from here to here, that's down. That's a bearish market. No need to overcomplicate it, okay? We're in a bearish market. In a bearish market, we're interested in trend lines on top of price. So here we are, and we're going to connect these two peaks to get our trend line. Okay, now let's talk about this connection because this is really important. So everyone's got different ways for drawing their trend lines, and 95% of people who are teaching it are wrong. So if you want to really make money, listen up. This is important. This is very important. When you draw your trend lines, you need to know the outermost boundary of your diagonal support and resistance. The outermost boundary. So first of all, over here on the left right here, this needs to connect to the uppermost peak right here, the wick, top of the wick. Okay, and then right here, I need this to connect to the top of this wick right here. So I have the outermost peak. All right, so I'm going to adjust it to that. This is incredibly important, and there will be minor exceptions to this rule, and we'll look at more examples in other videos of when that happens. But in general, this is how you properly draw your trend line. When you draw your trend lines in this manner, you know for sure that when price breaks this, it's broken the outermost boundary, the outermost support or resistance level, and you can for sure rely on the fact that you are looking at a potential trend change. So now, notice how when we connect these peaks, what happens when price gets back up? We fall again. And then price comes back up right here, we fall again. And then remember how when we discussed support and resistance horizontally, we discussed how we'd like to see that it takes strong momentum to break through the level. It lets us know that that level is indeed strong and something that we can rely on from a fundamental standpoint. Here we have a strong candle breach right here, and then
Oh, mercy, mercy, mercy.
Yeah, I guess that's a good nice pause for the break again too. If you're looking at the current structure where it's at before it fell back down, and you look to the left, you can see the zones of previous structure, knowing that if it broke that structure, it's going to fall. So as you can see, we had a triple top there before it fell back down after breaking the downward trend. And right from this screen, I'm looking straight to the left, and I can see a period of interest where he has it highlighted by an oval, and that's exactly where price came to, consolidated. I'm not sure, I can't see the time frame we're on right now.
It's the
But looking
daily.
back to the left, I can see that at that daily zone, when it broke and broke through, you see the retest where it came back up for a retest and then continued downward on the right side, on the far right of your screen. So when you guys are charting and looking for your trend lines, you want to look to the left to see what had happened in the past, because that'll give you a good idea of where banks like to play their buy-sell game at. And that's where I usually tend to, I'll draw my chart up and give it to my team, and I'll say, hey, when it breaks this, I'm in. And that's exactly why I get in, is because I'm looking to the left, guys.
Okay. Good info. Mm-mm.
indeed strong and something that we can rely on from a fundamental standpoint. Here we have a strong candle breach right here, and then
Okay. This is very important because you guys need to know how to draw these up.
it's just that we're now turned diagonal. So here is our reaction point right here. We can get rid of this arrow. All right. So let's be comprehensive here and mark these. The slower these videos are, the better, because it just ensures that there's no questions left. Breach, breach, and retest. All right. Now another word for peak, we keep using the word peak so that everyone understands that these are the highs of the market that are creating this trend line here in this downtrend. But another word for all of these is what? Resistance. This is the market's diagonal resistance.
Okay. Woo, we got through that one. Okay, drop in the chat if you have any questions, okay? Where's the... Oh, I cannot wait to get back to my Mac. This is... in the chat, guys. Okay, moving right along. We've got one more on trend lines. I'm going to say a quick prayer that we get through this one painlessly. Okay, and then we're going to move on to market structure.
Now, in the previous video, when we had talked about this example, all right, welcome everyone to another video on trend line trading. I wanted to come back to the example as we've previously discussed in another video to help explain one of the key concepts about trend lines. So if you recall, we discussed, and I've already got these areas circled here because we've discussed them before, but we discussed how important it is to use the outermost boundary when you are connecting peaks or connecting valleys to draw your trend line. So in this example, the outermost peak was this wick right here and this wick right here, which we can bring it actually a little further out like that, okay? And then I'm going to drag this through here, right in this area. Now, in the previous video, when we had talked about this example, we didn't talk about what to do in this case once we had a wick come through the trend line. So based on what I've told you all, you needed to adjust your trend line to fit that new wick like so. And let's just move this arrow slightly out of the way and make sure. Okay, yeah. So we've got the outer boundaries here, which is good. So let's zoom back out. All right, so we're going to get further into this topic in a later video. We're going to talk about fanning and how these multiple possible trend lines actually work together to give you a clear understanding of the trend and what you need to be looking to do. But as just a general idea, I wanted to explain this specific example so that you understand how to adjust trend lines to market conditions and keep everything accurate. So in this case, for simplicity's sake, I'm going to delete the original trend line. So once you see that this has happened over here and that price has busted through the original trend line, you then, so keep in mind our trend line was here. Once you see this and price falls back down, you adjust the trend line to here, and that is now your trend line. So then over here, when we had price, and price busted through with a strong candlestick, came back to retest, that resistance has turned to
Nah.
So then over here, when we had price, and price busted through with a strong candlestick, came back to retest, that resistance has turned to
I
Truly painful.
I
I
am
want to say thank you to those that have hung in there despite all the
exactly.
technical difficulties. Sarah,
Uh,
I'm at this point frustrated myself. What I'll do for you, Misty, is
You muted out. I can't hear you.
hear me now.
Yeah, I can hear you now.
All right. How long do you usually take your Zooms? An hour?
Yeah, about an hour.
Give me a few minutes. I'll jump on to close. I'll help close you out. I'll do a quick trading view analysis on a chart so that they can see all of this in confluence and kind of get an idea of what he's trying to teach them. Because there's another thing that he should put in there that I'll add that'll show you that when you start seeing the decline or incline in degrees on your trend lines, as you had two trend lines prior to this, you'll start seeing the move start to think of it like this. You're climbing Mount Everest, right? And it's getting steeper and steeper and steeper and steeper. And eventually, that degree of angle you're trying to climb is get to the point where you're maxed out. And that's the same thing with the market. The market's going to start to show you more and more trend lines in the movement that it's going, that's getting steeper at steeper inclines. And that's a telltale sign of when the market's about to shift on you. So as you continue to draw your trend lines from the left all the way through, as the market continues to move down, you'll start to see it yourself. And that's when you start seeing the channel start to close in on you.
Okay. All right. Um, it looks like tonight all we're going to get through is this market structure. I'm going to give MJ just a few minutes, and what he's going to do is I'm going to let him share his screen. And since this was all jacked up, I hope that you have got the conceptual idea of what trends are. But we're going to let him kind of break it down and explain it a little bit better to us, because for your homework tonight, guys, what I want you to do, and I realize that some of you are having a problem maneuvering around TradingView. I just put in both of the chats, it's an exceptional video for beginners to learn how to use your TradingView, what all the buttons mean and what they do, how you draw this, how you draw that. Because for homework tonight, guys, I want you, the three charts that you're watching as we're going through this, the three different currency pairs, I want you to pull them up and I want you to draw some trend lines. And the one thing that I do want you to notice is how very important it is that you get it to like the very, very, very tip top of the highest point of these candles, so that your line is actually sitting like right on top of it as you go through. Precision is key with this, guys, because just a millimeter off is pips and pips and pips. And I want you guys to practice it and be practicing it while we're going through this so that you've got it down and you can, and before you know it, guys, you're going to be opening up charts and you're going to be like so fast, but it's going to take some practice. It's going to take some practice. Okay, I'm going to stop sharing and I'm going to let Michael share. Thank you so much, MJ.
You're very welcome. We're gonna do this from the hip. I'm just gonna let you all type out in chat. I'll take probably the first one or two pairs, and we'll chart out real quick so that we can see that I'm not doing this pre-scripted. I'm gonna show you exactly what I do, and you're gonna see it at a level that you understand. So go ahead in the chat and just drop a pair that you're interested in looking at, and we'll start there. I'll share my screen as soon as I got it set up here. Let's see here. Close this down. All right, let's do boom. Don't mind me, I got a full house, kids home from school and all that stuff. So it's just one of those days. All right, got the 20 pip and dip. Yep, that's all we need. All right, first pair up was EUR USD shared by Annie. So we'll start there. I see the GJ. I hope you know what you're doing. GJ will eat your pockets, and EJ after that. So we'll do those top three, guys. So let me share my screen. All right. And what you can see on the screen here is your 20 pip and dip. And we're going to go to get the chat box back open. All right. All right. EURUSD. That is actually my top traded pair during London and US New York session. All right. So here we go. And I don't need this 20 pip and dip. We'll turn it off. All right. Boom. We're going to squeeze it down. We'll jump up. I like to chart on the 4. And let me clear all indicators off so you guys can see this. All indicators are cleared. All indicators are clear. We also have a clean chart. We're on the 4 hour. All right. So we can see our trend line, right? What we were looking at in the videos, right? And we're just going to do this raw. It doesn't have to be complete accurate because I'm not trading it. The moves already happened, broke out, and now we have the retest. So here's our trend line. All right. And prior to that, you can see this trend line that was broken right through here, and it created this channel. So look, you see how this trend line was drawn from tip to tip, right? Just on our move right here. This is our first trend line. Let me delete the second one. So that's our first trend line on this move down. And we can see how when it broke this trend, it consolidated, it retested it, came back down and started another trend. Now watch this. From here through here, we had our second channel. Still in this downtrend, it hasn't broken up yet. It still hasn't. All right, so it broke through there, then it created another channel. And yes, I do like to use the wicks because that tells you true movement up. And actually, it's a lot cleaner if when you get to this level is I do it on the lines because the lines is the true movement of price. And then we have that one we can clean up just a little bit. Don't have that fire on. And then we have this move right through here. See that? So this is just the move. It's losing momentum, right? Because the inclination of the downward slope is moving outwards. So it's losing momentum of being dragged down. And in the inverse of an uptrend, you'll see the exact opposite where well, it's been in a downtrend for a while. Yeah, of course, COVID-19. So right now we're just consolidating. So what I do next, I'll jump down to my 1 hour and I'll draw my channel. It's a parallel channel, so it's right here, parallel channel. It's one of my favorites. I'll hold shift so I can draw a straight line across and I'll move up from low to previous high. And right here, this dotted line is the halfway mark of the channel you draw. So as you can see, price has been trapped below this halfway point. So if I'm looking for a trade on EURUSD, I would look for a break above, a retest, and a break out of this channel for the up move. What do we have here? Wow. Let me clear this chart for you guys and I'll show you what I see, okay? Remove drawings and indicators. All right, so I have a horizontal array being respective of this floor. I have a downward slope. On the hour. So when you start to see this pattern develop, let's take it back even further because we can always just look left, right? Just look left. I looked at this point right here. We had resistance and support. Looking to the right, look what happened to price, respecting this. Now I'm gonna show you one more trick. I'm gonna draw a vertical line and show you a flag pattern. Majority of pairs that fall into this type of pattern are going to break up, retest, and see ya. So let's see here. Let's draw the channel back again, parallel channel. We have our support, previous high, and there you go. That's what I'm looking at. So for this pair, I'm looking for this. A break up, a break down, and a continuation upwards. Now you might say, okay, well, where are you going to stop at? Where's your TPs, right? Here's another little trick. I'll take a Fibonacci retracement tool, which is here. One of my favorites, starred. Take it from the ceiling, take it to the floor. Once again, I'm using the line chart. I'm not using candles. I'm not using Hakanashi at this point. I just want to find out where's our ceiling, where's our floor. So actually, I drew it backwards. Let me delete that. From here to the 100% of the move. All right, so our retracement moving back up is currently sitting right, where are we sitting at? Right over the 23.6 of the move. And all I did was I looked left for the move from the top to the bottom, and look where price is right here. So my TPs would be a break and a retest, probably more down on this scope right here. Oh, sorry, wrong arrow. And this move here. So this would be TP1. And from this move onwards would be my TP2 at the 50. If you have strong volume and movement, you could see a move up to the 61.8 before a retest down to the 50. So there's my TP1, TP2s on EUR USD. All right, I'm not recording, sorry, otherwise I would have sent you the video, but we'll do another one later on. GJ, so we're done with EU. Any questions, guys? Go ahead and chat it out in the chat group. Typo 2 if you got it, and we'll move forward. All right, cool, nice and easy. So GJ, once again, we're starting fresh. And I usually chart on Sundays anyway, so all this previous charts it's really easy for me to see. So once again, the first thing I personally do, I see we had a downtrend, we broke out, we consolidated, we broke back down. Let's find out why these moves were really important. We'll start at our retracement. Where are we at? 23.6 once again. We came up to the 50, rejected to the 38.2, retested. We got a shark fin. You see this kind of movement? Shark fin is coming down. Just like when you get an inverse shark fin. We had one here. Price moved up. We had a shark fin here, down. Another shark fin, down. When you see these impulse moves, expect a downwards motion. When you see this slow motion like this is leading up to a peak. You see a shark fin, it's coming down. We had a consolidation here before it dropped, a shark fin here, and a drop, and a slow climb back up with retests along the way. Then we had a sort of a shark fin here before it dropped off. I used to look for W's and M's, and it's really easy to see those patterns, but now I just really just look for momentum. All right, so here we go. We had our downward movement, we had our up, we had our consolidation phase, a shark fin pushing down, an inverted shark fin pushing up for a retest, and then a continuation down here. What am I looking for? Is really easy. We're gonna do this. Use another channel, peak to peak, and pull. Currently under the 50, remaining in this channel, the movement is down. I'll look for a slight retest and a continuation down depending on the market and news. All right, that covers GJ. Any questions? Type a 3 if you're ready to move forward. How many pips would that have been at take profit 2? I'm taking it, the take profit 2 for EU. Here, I'll show you how to measure it. EUR USD, you take this tool right here, this measurement tool, and starting point is going to be right here on the 23.6. TP1, 118 pips. TP2, 213. TP3, 308 pips. I know everyone has a different trading strategy. I normally take TP2s on my way up. Once I'm halfway up to TP1, I'm already moved from entry to positive, and I'm trail stopping it all the way through. And I'll let market show me where the previous lengths were, so you can see this is a zone of consolidation. So I'll take my stop loss right around here, moving up to that zone. And I'll do the same about the 50 here on the way to TP2. And if we bounce through TP3, I'm looking at just a quarter. I'm looking left. You see these zones right here? These zones on the left is where I'm looking at structure. So my stop loss is normally right under. So it'd be under here. And that move my next stop loss to about here. My next stop loss is just below the 50, moving up to TP3. What is your name again? My name is Michael Jason. I go by MJ. Sorry, I'm just going through the chats, guys.
So there's your TPs, Billionaire Ken, I think. And we'll move on to our final pair for the evening because I have to go cook dinner. I live in Hawaii, so I'm 6 hours behind Eastern. EURJPY. All right, so EURJPY, boom. Let's make sure we're good here. All right, clear. All right, and I have a lot of strategies, and I teach my team. I'm also in TRADERA, just way under Misty and under Stella and Javier and all of them, but you're gonna see me around a lot. I do a lot of training. So I'm not affiliated with TRADERA outside of being an IBO. Remove drawings. All right, same thing here, same setup. That constant moves down. The retest up to about the 50 of that move, again, broke. So I'm gonna take this point here and this current move here on a Fibonacci retracement. Fibonacci retracement tool. All right. Once again, consolidating on the 23X, but the move has not stopped yet. It is still a downtrend because I can see this right through here. All right. So we had our first descending trend line. What actually came here and then a retest here and a drop right off the 50 move. And then we have this trend line here. So we can see the decline of the pattern is starting to increase. I'm going to do this right here. And we can set our floor right here. And you can take it left all you want. So it happened here, here, and it's just slowly sitting in this wedge right here. So once again, the flag I'm looking for is going to be right here. And I'm keying in on this zone right here, looking for a break up, a retest of the 23.6 before we take our TP 1, 2, and 3 again. If it respects this trend line, we're going to draw a channel. So let's clear out this, move drawings, and drop a fib on it real easy. And then we can draw our channel. Go here to here and bring it down to the floor. Until it breaks this channel, it's going to continue down. Definitely the bears have pulled the bulls and they're controlling it. We have had 3 channels so far. We've had this channel, we've had this channel, and we've had this channel. This right here is an impulse down. You see the inverted shark fin? Seeing this, as soon as I saw the reversal here and the break of this trend, I would have taken it straight back up, at least TP1 to TP2 right here. So what I'm saying there is this move right here. See this steep move down? That's an impulse move, dragging it all the way down. And this is on the hour chart, guys. So as I seen this, as soon as it broke here, knowing that this is the floor, break and it retested the line, can turn to Hakanashi. I use Hakanashi, by the way. So as soon as I seen the Hakanashi breakout, it dropped right down to the 15. As soon as I seen this breakout here, I already know it's going up. And look, it's already formed the trend line for you, moving up. Broke this trend, started into this channel right here. So you could have taken this move down, this double top. You see this Batman symbol here? I call this the double top right here. The impulse down, the breakout, following right up this trend line. So that's a win here, and a win here on this trade, and a win here on this trade. Knowing that once I've seen this, you can see the trend line already previously drawn. We drew it back here. Boom, moving upwards. So what I'll do on this pair real quick, you got it, trend line. If we lose momentum on this move here, and I'd be looking to see what it does on this trend line. And this is raw because the move is still coming down, but if it reverses off this trend line, then I know that we're breaking out of this structure. It comes down and respects this, and I can see it slowly getting into this wedge form here. And that's about it.
Thank you so much, MJ. Save the day, buddy.
You're very welcome.
So I guess let's see, tomorrow is Saturday night and we will resume with our market structure. Okay, guys? Thanks for sticking it out with me. Yeah, he's great. He's great. And I will see you guys tomorrow.
All right, guys. Have an awesome one. Aloha from Hawaii. Be safe out there.
Bye bye.